Good afternoon, ladies and gentlemen. Welcome back to the 27th of May weekly market review. And today I have my co-host, Mr. Gerald Wong, who had a very nice haircut over the weekend, I believe. How are you, Gerald?
Yes, hi everyone. Good afternoon. Sunny is right. I just had a haircut yesterday. So I think we are now going into the last week of May. Last week we saw quite a bit of movement in the market, which Sunny and I will actually be going through with participants who are on the sharing session today.
Yes, indeed. Last week we had a bit of a roller coaster ride on the market, especially on the US side. On Wednesday, we saw that Nvidia earnings that was mind blowing, and on Thursday, market pulled back by a lot because in the background, some of the Fed officials were speaking, and they are doubling down on the higher for longer kind of narrative. So getting more hawkish on that, on the tone over there. So this caused the market to go topsy-turvy last week. And I believe Gerald will be going through Nvidia earnings today as well as the Singtel earning, which came out last week as well.
Yep, that's right. So before we start, just the usual disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice. Okay, we have an upcoming Ask SIAS on the 12th of June. This is exclusive for members. So if you'd like to register as a SIAS member, you can actually scan this QR code here. If you find the weekly market review helpful, do leave us a review on Google by going to this website. And if you'd like to consider joining SIAS as a member, it costs just $12 per year or $1 per month, and you can scan this QR code or go to this website, sias.org.sg/membership. Okay, so this is what we saw for the markets in the past week. So the S&P 500 closed about flat, but still above the 5,300 levels. But within this, we saw quite a bit of divergence and volatility. We see here that the Dow Jones was actually down 2.3%, but the Nasdaq was actually up by 1.4%, and a big part of that was lifted by Nvidia and other AI-related stocks, which bounced after the Nvidia results. Okay, in Singapore, we saw very little movement. The STI was just up by 0.1%, so similar to what we saw for the S&P 500. Okay, I've been talking quite a bit about US data points, but there were some economic data that came out for the Singapore market last week. We saw the first quarter GDP numbers, where the Singapore economy grew by 0.1% compared to the previous quarter. Okay, so the trend here that we see is that there is some moderation. Okay, after accelerating for most of the later 3 quarters of 2023, the growth slowed sequentially to 0.1% in the first quarter. Okay, we also look at the inflation data. So what we see here is that inflation actually was at 2.7% in the month of April. Okay, so this is unchanged from what we saw in the month of March. Okay, so overall, what the MTI has said is that the GDP growth forecast for 2024 remains unchanged at 1 to 3%. And what we see here is that the 10-year Singapore government bond yield has moved around a bit, but on average, we see that for the month of May, it has hovered around the 3.3% level. So for those of you who are interested in, say, the Singapore savings bond, what this means is that maybe for the Singapore savings bond next month, we might still see the 10-year average rate be at about 3.3%. Okay, if you look at the STI, okay, we have the top gainer Yangtze Shipbuilding performing very well, up 8.6%. Okay, outside of that, we have Thai Beverage, Venture Corp, SGX, and CityDev also coming up as the top performers in the STI in the past week. In terms of the worst performers, we see Sembcorp Industries down, down by 4.4%, and Jardine Matheson down by 2.9%. Okay, Seatrium continued its decline, down another 1.9%. So quite a number of stocks here that we see continued weakness. I remember that Jardine Matheson was within the worst performers in the previous week as well. Okay, one stock that I wanted to talk about today is Singtel. What we see in terms of the share price is that it has been pretty much range bound at about the 230 to 260 levels, okay, over the past 6 months. But over, I would say, the past 1 month, it has recovered slightly from a low of about $2.30 to now slightly above 240. Okay, what happened last week was Singtel reported their full year results. The fiscal year for Singtel ends in March. So this is for the 12 months ending March 2024. Okay. What we see here is that in terms of the revenue, in terms of the operating profit, it has been about flat over the past 12 months. And then if you look at what has performed slightly better, the regional associates profit before tax actually went up compared to the previous year. And with that, the underlying net profit for Singtel actually went up, whether we look at it from a constant currency or whether is it on a reported basis. Okay. If you look at the headline net profit number reported by Singtel, that was a bit weaker, and that is driven by the impairment that they took for their Australian business, Optus, which led to the lower reported net profit compared to the previous year. Okay, but what we see here is a trend of improving return on invested capital, where from 7.3% in FY22, it went up to 8.3% in FY23, and in FY24, it was at 9.3%. Okay, so if you were to start by looking at the two key businesses for Singtel, Optus, as well as the Singapore business, for Optus, actually, the EBIT for the past year was about flat compared to the previous year. So about 288 million Australian dollars of EBIT that Optus generated. Okay. For the Singapore operations, it was a bit weaker. Okay, so what we see here is that both the revenue as well as the operating profit for its Singapore operations actually came down because of some cost inflation. Okay, but what was more positive for Singtel is that if you're to look at the growth engines, this comes through from NCS, which is its digital IT services business, serving enterprises, as well as the digital infra co. This relates effectively to the data center businesses. What we see here is that the revenue for NCS as well as the EBIT actually grew very strongly. And then what we see for the digital infra co business is that the revenue actually saw a significant growth driven by higher demand over the past year. Okay, earlier we shared that the regional associates actually did well. So this is what we see here, where quite a number of businesses, including Airtel in India, AIS in Thailand, all of them actually doing fairly well with improvement in the pre-tax profit compared to the previous year. Okay, the other key development for Singtel really relates to its strategy announced over the next few years. If you recall, Singtel has been undergoing this strategic reset where they've been trying to reinvigorate the core. We saw that they have been trying to drive the growth in some of these key businesses like NCS in terms of its data center business that we shared earlier. And they've also been actively recycling the capital to be able to pay out more returns to shareholders. Okay, so that explained the improvement in return on invested capital over the past few years. But what they've actually unveiled is Singtel 28, which is a strategic growth plan with the objective to drive sustained value realization. And this is really trying to lift the business performance as well as to be able to drive better capital management. Okay, so in terms of what it is aiming to grow further, that once again comes through from some of these growth engines. We shared earlier that NCS, which is its enterprise business, it wants to be able to further develop this and effectively strengthen its presence in Australia. Okay, for the digital infra core business, effectively this is the data center part where they want to be able to further grow this business, including being able to grow its capacity within the Singapore market. Apart from that, they also want to be able to improve on their capital management. So what we see here is that they have announced this policy, including paying out a core dividend, which is between 70 to 90% of the underlying net profit after tax, as well as a new value realization dividend, which can potentially be 3 to 6 cents per share annually. And this will be funded from the excess capital as well as any potential further capital recycling initiatives. Okay, so with this, we have seen an increase in Singtel's dividends. Okay, in FY23, it was at 9.9 cents. But in FY24, we saw an increase in the dividends, which include an increase in the interim dividend, final dividend, as well as this value realization dividend of 3.8 cents. Okay, so what the company has tried to highlight is that this value realization dividend is not a one-off. So long as they're able to continue recycling their capital, that is something that they hope to be able to sustain for shareholders. Okay, so that is it for Singtel. Next, we have got NVIDIA. We shared earlier that this is something that has helped to lift the sentiment towards US tech stocks. And if you look at the share price of NVIDIA, it has grown very strongly year to date, close to double, given the continued strong demand for some of its AI-related services. Okay, so effectively, just in a nutshell, what is driving this very strong demand? If you're familiar with using ChatGPT, that really would be what we would call generative AI and what NVIDIA would call the most important computing platform of our generation. Okay, so if you think about ChatGPT, that relates mostly to text in terms of how most people use it at this point in time. But for NVIDIA, they see many other use cases relating to this generative AI, including things like image, video, sound, animation. So those are the things that will drive increasing demand for both its chips as well as other services. Okay, so what we saw in terms of its reported earnings is very strong growth. Okay, just in terms of one quarter in itself, it generated $26 billion of revenue. So that is close to 3 times what it reported in the first quarter in the previous year. And effectively, if you look at the 26 billion in the first quarter and the 61 billion that was reported from the full year last year, what this actually shows us is that the growth is actually very strong. Okay, we see that in terms of the operating income as well, 18 billion in the first quarter, and that is already close to half of what it reported for the whole of the full year in 2024. Okay, so overall, this strong demand for its AI chips is helping to drive higher revenue as well as operating income. If you look at the gross profit, a similar trend, and I think this is where not only do we see higher revenue for the company, the gross profit margin has been going up as well. So that is something which has actually helped to lift the net profit of the company. Okay, and with that, they actually managed to generate very strong cash flow of close to 15 billion in one quarter. Okay, and what they've announced with the use of this free cash flow is a share repurchase. Effectively, they have 14.5 billion of remaining authorization as of the end of Q1 that they can continue to use to be able to repurchase the shares of the company. Okay, so all in all, they have also talked about using some of this excess capital to be able to grow its talent as well as platform to be able to further invest into its technology. Okay, in terms of what are the breakdown of the revenue at this point in time, the data center is actually the key contributor. Okay, so that actually contributes about 80% of the revenue. So this is effectively where some of its AI related products, including its chips, as well as networking services, would actually reside. Okay, outside of that, what we have is the gaming business, which was what it was known more for in the past, as well as the automotive business, which is small at this point in time, but can potentially be an area of growth. Okay, so this is what is really driving the growth at the point of time, which is data center. And what we see here is effectively the very strong growth in revenue to about 23 billion in the first quarter. And that is really driven by the continued demand for some of its AI-related products. Okay, in the longer term, what they've identified is that effectively there are many different use cases for some of its technology. We are effectively now only at the early part of the adoption, given that what we have looked at in terms of the segments will relate mainly to the gaming as well as the data center business. But there are other businesses that can potentially be tapped, including the enterprise and cloud businesses, autonomous machines. So those are the different things that will potentially help to drive longer term demand. Okay, so in terms of what to look out for this week, we have the 30-year SGS bond applications, which will close today. We have the Singapore savings bonds applications, which will close tomorrow. So quite a busy week for bond investors in Singapore. Okay, and then we have the tail end of the earnings season, where SETS will be reporting its results on Wednesday. And in terms of the macro data, we have the US PC price index data, which is the Fed's preferred measure of inflation, coming out on Thursday. Okay, so those are the things that we'll continue to keep a lookout for and will continue to drive the market this week. With that, I'll hand over to Sunny, who will share more about the technical analysis.
Okay, thanks, Gerald, for that detailed breakdown of the NVIDIA earnings. I think that was the blockbuster earnings that a lot of people are watching, and it continues to show that the results, the demand for AI and tech is still very strong. So that's why on the US side, we see the Dow Jones and the NASDAQ, the tech-rich NASDAQ, perform differently over the past week. But first, let's look at the Singapore index first. So the narration over the past 1 week that might be overlooked was that the Fed officials, some of the Fed officials actually said that they may not see a rate cut this year, or it may only be one rate cut this year, and maybe even not seeing it in September, maybe November or even December. So that was the concern that caused the 600 points pullback in the Dow Jones Index last Thursday. On Singapore side, this narrative where interest rate is higher for longer, I believe it's a more of a positive news, because the majority of our STI index is actually dominated by the 3 Singapore banks, and with a higher interest rate environment, that could lead to the more profits for our 3 local banks. And hence, on today, Monday morning, you can see that STI is starting to recover after last Friday pullback. So on the STI, we are still watching the year-to-date high on the 2nd of May. That is at the 3,300 and 24 points level. We are now at 3,019 or 18 points, so about 4 or 5 points away from that year-to-date high. And I still believe that this will still be the key resistance level to watch out for the STI index. Okay, on the support side, earlier we identified this area over here, which is around the 20 days moving average to the 50 days moving average. That will be the support zone that we are looking at to accumulate on the STI index. But it seems that market in the past week has moved higher, and you can see the basis of the Bollinger Band, the black line that you see here has been providing a very good support for the STI index. Whenever it come back down to retest the black line, the 20 days moving average, prices starts to jump up again. Of course, going forward, you might see a squeeze over here, and then there might be a pullback downwards, okay, towards the lower bound of the Bollinger Band. Now at the 3,266 points level, or I will just round it off, 3,250 points level would probably be a key level for us to look at and get back in on the STI index. Now, the previous time we had such a strong recovery was somewhere in the March to the April period over here, as you can see. So once the RSI hit somewhere around the 65 points level, right, you will see that you may see a bit of a pullback towards the 50-point neutral mark, and that is only when I will be pay a lot of attention on the STI index to see if there is any opportunity to get back in. As of now, I think market is still a bit toppish, and it could not be a good time to accumulate on the STI index yet. On the MACD indicator, you can see for the past, at least I believe, past 3 weeks already, we are seeing that it doesn't seem to be any kind of a direction as indicated from the MACD indicator, which is not a surprise because we are going into the tail end part of the earnings season. There might be a limited catalyst coming on in the next couple of weeks. So that's why market might be stabilizing or a bit quiet in the next few weeks going into the June holidays. Okay, RSI is also moving in a sideways movement and is closely tracking this 14 days moving average of the RSI at 59. RSI is at 60, so very close together. So not much of a change in momentum or direction yet for the STI index. So I believe it's status quo and going to likely be a range bound kind of a situation, at least for the next 1 week or so on the STI index. Okay, let's now move to the more exciting Dow Jones Index. So this was the 600-point, a big drop on Thursday that we saw. The main reason was because on Wednesday, although we saw the blockbuster NVIDIA earnings, but the Fed official actually spoke of doubling down on the higher for longer interest rate scenario. Hence, some of the big names in the Dow Jones Index actually pulled back, and hence we have now touched the 20 days moving average, which was the zone or the level that we are always talking about, that should there be a pullback towards the 20 days moving average, that will be a key point for us to look up and see if there's an opportunity to accumulate on the US market or the Dow Jones Index. So the market actually stabilized on Friday, and as you can see, Friday there was not much of a movement. Dow Jones Index was only up 4 points or 0.01%. So I believe that could be a bit of a stabilization, and accumulation could start to happen between this level towards the amber line, which is the 100 days moving average, which is now around the 38,330 points level. So between 39,000 to 38,300, I believe somewhere in the middle here, the average could be around the 38,500 level. That could be a nice spot to start accumulating on the Dow Jones Index. On the indicator wise, you can see the first negative MACD histogram appearing. That means that there could be a change of direction here in the Dow Jones Index movement, and the index is likely going to trend a little bit downwards further, okay? So that could mean that we have a chance to hit the 38,500 points level, which is 500 points away from last Friday closing numbers, okay? On the RSI, we are now hovering around the 48 points level, very close to the 50-point neutral mark. And the 14 days average of the RSI is at 62. So definitely market is losing quite a bit of momentum right now. And probably next few weeks could be we could see a bit more of a pullback on the Dow Jones Index, but I don't see a very big drop. As you can see, I'm taking the reference from the April period when it hits the amber line that you see here, the 100 days moving average. Market trend to get a bit of more support, and then market try to trend up again. So 38,500, 38,300 would be the level that I'm looking at to accumulate on the Dow Jones Index, and this opportunity have been waiting for quite some time already. Okay, next let's move to the S&P 500, who had a slightly better Friday than the Dow Jones Index. Of course, we saw that big drop on Thursday as well, down about 0.74%, about 40 points drop. But on Friday, we regained about 36 points. So that more or less negates what we saw on the pullback on Thursday. Okay, so the S&P 500 still very toppish on the top side. Though we did not get a new all-time high, we are still staying around the 5,300 points level, with the high we saw on Thursday at the 5,341 points. So it's still quite high on the S&P 500, and of course, I'm taking reference from the 20 days moving average to the 100 days moving average. That would be the key zone that I'm looking at to start accumulating. But probably there's still some way to go before the S&P 500 hit this zone over here. So key level I'm watching, of course, the 100 days moving average near the 5,000 level, which I may not have some confidence that it will reach here, but somewhere between this area of the 20 days moving average now at 5,200 to 5,000. So I think between this point over here, the 5,100 point level, or even the 50 days moving average at 5,161 or 5,150, I would say, would be a good point to start accumulating on the S&P 500. And I'm waiting for that opportunity to appear before accumulating. On the indicator side, the MACD indicator, as you can see, the MACD line is converging towards the signal line, meaning that the uptrend momentum that we see since the middle of April to end of May now is starting to subside already, and there could be a change of direction happening soon if the MACD line cross below the signal line over here. And then we may have a pullback to the 50 days moving average at the 5,161 level. On the RSI, we have the current reading at 63, still healthy, just slightly below the 14 days moving average of the RSI at 64. So if let's say there is because we still have some earnings coming out from the US, if let's say those earnings push the index up towards the 70-point level on the RSI, that could breach the overbought level and then signal to us that there would be a reversal in place that's coming up, and that will coincide with the MACD indicator for a pullback towards the 50 days moving average at 5,161. Lastly, let's look at the best performer of last week, which NVIDIA almost single-handedly shield the market from some of the big pullbacks, because if NVIDIA did not rose 15% last week on the earnings, I think market would be more badly hammered from what we saw on Thursday. Okay, so the Nasdaq Composite Index, we do have a new record close on the Nasdaq Composite Index at 16,920 points. The year-to-date high happened on Thursday, which I'll have to put another line over here. Okay, that would be at the 16,996 point level, and we could be testing the 17,000 mark, which could be a new benchmark or a new handle for us to look at the Nasdaq Composite Index. But as of now, I think this uptrend that we see since the middle of April still have some room to grow, and it could actually hit that number or even the upper bound of the Bollinger Band at 17,168 points. Of course, that would mean that the opportunity to accumulate on the Nasdaq Composite Index is going to be more difficult than the Dow Jones Index and the S&P 500, because we still have quite a distance away from the 20 days and the 50 days moving average. And I'm also waiting for it to have a pullback towards this zone over here between the 20 days and the 100 days moving average, and that is around the 16,287 points level, or even the 100 days moving average at 15,800 points level. So if it comes back down to the 16,000 point level, that could definitely be a great opportunity for us to get back on the Nasdaq Composite Index. So MACD indicator still have some strength, although that strength seems weakening, but it still has a good presence in the momentum that we are observing right now. On the RSI, we are very close to the 70-point overbought mark, just 2 points away from that level. And once we hit that level, we will probably see a bit of a technical pullback, at least towards the 20 days moving average at 16,491 points, or the 16,500 points level. So I'm on the Nasdaq Composite Index, I'm looking to accumulate between the 16,000 level and the 16,500 points level, should it has a technical pullback in the next few weeks. Okay, so these are my coverage on the charts this week on the STI and the 3 major US indices. Anything to add, Gerald?
Thanks so much for the update on the technical indicators. I guess now that we are coming close to the end of the result season, maybe we'll be keeping a closer lookout for the macroeconomic data points. And I guess the PCA index data will probably be something that is closely watched to give us an indication of where inflation is and what might then be the Federal Reserve interest rate direction.
Agree that PCE price index will be the key data points to watch this week, and that could sway the market by a lot. And whether we will see a rate cut this year will definitely depend on that data point that we will be seeing. So I think that's all the time that we have for today. Thank you everyone for tuning in. And in the meantime, trade safe and stay safe. And we'll see you again next week on the next weekly market review. Goodbye.